All right. Hello, everybody. This is Mike Rixey. I am the lead options instructor for Netpicks, and this is our options trade of the week. We're going to take a look at a brand new trade here today on United Airlines. We'll also circle back and take a look at some of our trades from the last few weeks. So if you've been following along, if you've been taking some of those trades, we'll go ahead and review those just to see where they're at, see if we need to take action on any of those. I have heard from a number of you that have participated, so congratulations on the winners that you've booked. Had a really great email come in this morning, so really glad you guys are finding benefit out of the trade of the week. Well, let's take a look at United Airlines here first. This is symbol UAL. This is a 195-minute chart. It's one of our favorite time frames. It takes the daily chart, which gives you one candle a day, and it speeds it up. It gives you 2 candles a day instead of 1. I love the daily chart, but I find it can be slow to react at times, and when you get into a market that's pretty active, like we've seen lately, the daily chart will oftentimes just get you in too late. And the sweet spot for us is that 195-minute time frame. One of the indicators that we've talked about the last few weeks in these videos is the pulse indicator down at the bottom. Right now it's the one that's showing as yellow and red. That's telling us when we are getting to an overbought or oversold extreme. I'm specifically highlighting the stretches where we have yellow bars. That's indicating to us that we're between a 1 and a 2 standard deviation channel move on the downside. What that means, when you start to see yellow bars plot like that, oftentimes it means price action is at an exhaustion point. We've had a heck of a move. Oftentimes price action will start to consolidate going forward or even reverse in the other direction. And a prime example of that, if you go back to look at previous stretches when we've had yellow bars back here on the upside. Notice how when these yellow bars started plotting on the upside, see how price action started to stall out and start to roll back over to the downside? We had another stretch here just a few weeks ago. Price action got oversold. We started to see those yellow bars print. See what happened with price action? With price action, once those yellow bars started printing, we started to stabilize, started to reverse back to the upside. Well, we just now, this week, have had another stretch print where we've had a number of yellow bars on the pulse, indicating that we're at another extreme. You can call it a double bottom in here when we started to get back down towards that 81 level. We held as support, and now price action is starting to reverse back to the upside. This indicator is a very reliable indicator. It doesn't necessarily mean that price action is going to turn every time immediately when those yellow bars start printing. What it means is going forward, the probability of that move continuing, in this case to the downside, very slim. Chances are you're going to see a period of consolidation or even a move to the upside. And that's exactly what we have started to see happen. Now, we got added confirmation here just over the past few days because our sentiment indicator, that's the histogram down at the very bottom of the chart, just went from red to green. We just went from a bearish mode to a bullish mode when that indicator went green. That's confirming price action's ready to continue to move to the upside. All right, so my takeaway from this is I want to put on a neutral to bullish position. Now, why am I saying neutral here? If we're going into a bullish mode, why not just buy a long call? There's a couple of reasons why I don't want to do that. Number one, price action has not confirmed yet. Price action started to turn higher, but we haven't seen it confirmed to hit our entry point on the upside. That's what those blue dots represent. That's a level, if we hit those blue dots, where I would be interested in a long call. We haven't gotten there yet. Well, I know that when those yellow bars in the pulse print, oftentimes we get that consolidation or a move higher. So one way of playing that is to sell a put spread. Because now selling a put spread, it's still a bullish position, but I give myself more of a neutral kicker. Meaning if we just move sideways here, I can still make money from that short put spread. The only move that hurts me is a big move lower, which I'm not expecting because this chart is already oversold. So let's go over to the trade page. Let's take a look at UAL. And now we have a decision to make here. What expiration cycle do I want to go with? I've been trading a lot of September monthly options. They're down to 21 days left to expiration. I like to trade a lot of monthly options because they tend to be more liquid. There's more volume, more open interest. That makes it easier for us to get in and out of trades quickly and at good prices. So if I open those up, what I want to do again is I want to sell a put spread. Selling a put spread is a neutral to bullish position. We're looking for a move to the upside. So I'm going to go to the out of the money puts here, and I'm going to go to, let's go to the 83 puts. I'm going to right click on the 83 puts, go to sell and go to vertical, and that's going to pop up an order down at the bottom. I do want to sell the 83 put. By default, that order popped up having me buy the 82.5 put. I'm going to adjust that strike. I'm going to click on that drop-down menu and change the strike from 82.5 to 81. I'm going to change this to a $2 wide vertical spread. There's a $2 difference between the strikes. I can collect 51 cents here. If I collect 51 cents, that's the most I can make on the trade. That's my maximum profit potential. My maximum loss is $149. Now, why would I take a ratio where I'm risking almost 3 to make 1? Doesn't really make sense at initial glance, right? Here's why I like this trade. Number one, it's risk defined. In this type of a market where we have seen wild moves back and forth on every headline out of China, every Trump tweet here the last few weeks. I mean, we've seen huge moves based on news alone. If you get caught on the wrong side of one of those news-related moves, it can get painful in a hurry. I would much rather be in a risk-defined trade here. I feel much more comfortable about that approach. So worst case scenario, if I am dead wrong on this trade, the most I can lose is $149 per spread. Now, I'm willing to risk more to make less because I have 5 ways of making money on this trade. My break-even point's at 82.49. And that number is calculated by taking the short strike, the 83 put that I'm selling. We're going to subtract the 51 cent credit that I can collect to put the trade on. That gives me the break even at 82.49. As long as price action stays above 82.49, I get to make money. So up, down, or sideways, I don't care what the stock does. As long as price action stays above 82.49, I'm okay. Well, price action's up almost at 85. I've got about a $2.50 wide cushion that this thing could move against me on the downside and I'm still okay. The only move that hurts me is a big move lower, which I'm not expecting because the market's already oversold, which we took a look at over on the chart. So I have 3 ways of making money directionally, up, down, or sideways. I make money as time decay adds up. Every day that passes, that helps me. I make money from that scenario, and I make money from volatility decreasing. We know the volatility market-wide has been elevated. There's been uncertainty priced into this market lately because of the unknowns with this whole trade war with China. As a result, the options are more expensive. We know long-term that when volatility gets elevated, it doesn't tend to stay elevated for very long. Over time, volatility is going to want to gravitate back lower, and that's exactly what we're expecting over the next few weeks. And if that does happen, that's the 5th way that I have of making money on this position. So there's a lot to like about this trade. That's why I'm willing to accept my risk 3 to make 1 scenario. I'm okay with risking between 2 and 3 to make 1. I am not okay risking 5, 6, or 7 to make 1. That's where people get in trouble with the credit spreads, but we're not doing that here in this example. Now, my target zone on this, I do like to close these out when I can keep between 50 and 75% of whatever I collect to put the trade on. In this case, if I collect 51 cents, if I can close this thing out for between 12 and 25 cents, that is acceptable. That's the range that I'm looking for. Okay, so I would set my closing order at 12 cents and just let it work. Over the next 21 days, if we get a move higher, great. If time decay adds up, that'll work as well. If volatility contracts, that also helps me. So any combination of those scenarios is going to have me booking profit on this trade. So it's a neutral to bullish position on UAL. I'm selling the 83-81 put spread, and we're looking to collect around 51 cents. That is our options trade of the week here for this week. I also, I should have pointed this out a few minutes ago. I do like the credit spreads here because I want time decay helping me. Going into a long holiday weekend with markets closed on Monday, this is a way that I can get some time decay working in my favor. Time decay is there Monday through Friday. It's also there over the weekend. Time decay doesn't pause because markets aren't open. Time decay is there all weekend long. So I want to put that in my favor with the credit spread. If you have any questions on this trade, go ahead and send me an email, mike@netpicks.com, or you can leave a comment here on the blog post. Let's quickly take a look at some of our open trades from the last few weeks. So let me go ahead and pop those up. Last week's trade, some of you emailed me on, was on Target. And we talked about Target being overbought. So we ended up coming in and selling a call spread. So let me go ahead and get these strikes adjusted here because we sold the 107.0109 call spread. And we collected 68 cents to put this trade on. It's now trading for $1. We're down about $32 per spread on this trade. So the reason I got questions on this is, what do we do? It's moving against us here. We're down 30 cents, $30 per spread. Do we do anything? Do we close it out? We do not. We hold it. Okay, we've got 21 days left to expiration. When you sell a call spread, it's a neutral to bearish position. I do want the stock to move lower, and I need it below 107. That short strike that I sold at 107, that's my break even. That's what I need the stock to stay below. Well, price action's up at 107.60. I need a 60-cent sell-off to be back on the dance floor here. 60 cents is a little over 0.5%. I mean, it's not a huge move at all. That can happen in the blink of an eye. So there's no reason to panic here. The credit spreads will recover much faster for you because you have those 5 ways of making money like we talked about a few moments ago. Because that time decay is helping us, the longer we hold, the higher the probability of that trade recovering in our favor. So we'll take a closer look at this next week, see if Target does finally start to roll over. We're off the highs today. Actually, we're a good distance off the highs today. The high's up at 109.33. So we've already started to see this thing turn today, and we'll see if that continues into next week. So nothing needs to be done here. We are down money, but no reason to close it out as of yet. Netflix. This is a trade from a couple of weeks ago. We came in and we sold a put spread. And let's see if I've got it loaded up here. I don't think I do. So let me just go over to the trade page and we'll load this guy up. So what we did is we came in and we sold the September 6 weekly options. Those are the ones that expire next week. They're down to 7 days left. We sold the 292.5, 290 put spread. So this was a neutral to bullish position. We collected 77 cents. This one has been all over the place. I actually talked to somebody yesterday that closed this one out yesterday, which is great. Netflix is back down almost $5 or $6 today. So we need this thing back above 292.5. We need about $1 move to the upside over the next 7 days. This is another one that if you still have it on, you can continue to hold it next week. Any type of a higher open next week, any type of a move higher midweek, we'll go ahead and take this trade off for a profit. So we'll continue to hold Netflix as is. The next one on the list was DIA. This is the Dow ETF. And we came in and we sold an iron condor a number of weeks ago. We sold the 268, 270 call spread and the 250, 248 put spread. And we collected $8, $108 per spread. So we've got a small profit on this one. What do I want the stock to do? I need it to stay below 268 and above 250. Anywhere inside of that range between 250 and 268 will allow me to make money. So in this case, we're still okay. Price action at 264. In a perfect world, a little bit of a sell-off would help us here. If we can get this thing back down into that 260-ish range, that would be great. So time decays adding up every day that we hold this position. Again, we've got a partial profit on it. We'll continue to hold into next week, and we'll let you know what we'll do at that point. The final open one that we have on is on Pinterest. And let me go ahead and open this one up. We sold a call spread here back earlier in August, and we sold the 37.40 call spread. When we put this trade on, we collected 80 cents. It's now trading for 35 cents. Because I collected 80 cents, my target on this thing was between 20 and 40 cents. If I can buy it back and close it out anywhere inside of that range between 20 and 40 cents, that's acceptable. Well, price action is trading for 35 cents mid-price. You can close this trade out anytime you want with a profit here. I still have my trade on. I'm still targeting 20 cents, trying to buy it back for 20 cents, that is. So I'm just going to hold into next week. We need price action to stay below 37. It's down around 34, just below 34 at the moment. We've got some room here. The only move that hurts me is a move above 37. That's another $3 move to the upside. I'm not expecting that at all. So I'm just going to continue to hold, see if I can squeeze a little bit more profit out of this one going into next week. So those are our 4 open positions. I'll continue to keep you posted. If you have any questions between our Trade of the Week videos, you can always email me, mike@netpicks.com, and I'll give you an update on what we're doing on our side. We did add a new trade to the mix today on UAL. We'll take a look at all 5 of these in next week's video and walk you through how we're going to manage those. So if you have any questions, let us know. Otherwise, enjoy your long holiday weekend, everybody, and I'll be back next week with our next Options Trade of the Week.